Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, October 19th, 2017. Well, folks, we had a nice gap down on the S&P today. This is the SPY, which is the ETF that tracks the S&P. So basically, you're looking at the intraday S&P right here. And again, you can see the gap down right here to start the day. Good flush right to this pivot low at around 254.40, and then that was it. And this is something we've seen very often. I want to point this out. Number one, there's early morning selling almost daily. Right here, we opened up yesterday, saw some selling, and then it went away, and the markets floated up. The day before, right here, selling, markets popped up, pulled back a little bit, and then floated up into the end of the day. The day before that, the markets opened up, pushed up for a brief time, and then sold off, and then we floated up the rest of the day. So this is a common theme. Now, what in my opinion is going on here is slow selling by institutions. So institutions have millions and millions of shares, right? I mean, collectively they have billions probably, but when you're talking about the S&P futures or the SPY here, you're talking about tens of millions of shares that they're holding, and what they're trying to do is they're trying to slowly move out of positions at these highs in the market without absolutely crushing the market. Imagine if they unloaded it all at the same time. We would crash, right? So they have to do it very, very slowly. The best time to do it, to sell, is when the volume is at its highest. For instance, today, in the first 30 to 40 minutes of the trading day, we did almost half the entire volume of today. So that's their real key point or time frame when they can sell. Once you get to about 10:30 a.m. Eastern time, the volume is so light that if they were to sell a little bit, it would literally cause the market to come down too sharply. All right, you see what I'm saying? So it's not worth it to them, especially for the few shares that they can unload just ever so slightly over the course of the rest of the day. It's not worth it for them to sell. So what they do is they just wait for the next day. And when they step away, that's when the small investor is buying the dip. The small investor has been conditioned that every single dip is a buying opportunity. Today being no different at all. Today we had the biggest gap down we've had in a long, long time. The spiders at the low were down like $1.25. Now, in the scheme of things, that's less than 0.5% on the spiders. But in the short amount of time here, it is the lowest, the biggest move we've had. But again, if you look at every single day, the markets make a low and then come off, make a low, come off. There has not been a significant down day in a long time. So the average investor is always going to be buying. So that's what happens. The institution steps aside, the small investor accumulates, buys the dip, and the markets float back up. And look at where we are right now, folks. The spiders are down 15 cents on the day, barely a loss. We're literally pennies away from gap fill, from being flat on the day. That is not a surprise to me. If you've heard what I've told our members here, it's very simple. Until the market proves that it can go down, always assume it's going to bounce. That's why today in the morning session, we did 5 trades, all winners. I have a 6th one that we're still in right now. But this morning, again, we bought the dips. We bought Apple twice. We bought the spiders. We bought a bunch of different things at key technical levels because the obvious angle of the market is it's going to float up. And that's exactly what we did, and we ended up making very, very good money. Probably one of the better days we've had of late because it's been so quiet every other day except today. Bottom line, again, is this market is going to continue to be a buy the dip until it proves otherwise. What would prove otherwise? If you could get a significant downside day on heavy volume where the market doesn't bounce, then you need a confirming day after that, which would be another significant down day of heavy volume. 2 consecutive back-to-back down days will make buy the dippers question whether or not the market's going to bounce. If you get one down day, honestly, I think the next day market, investors, if the markets don't go down sharply early in the day and continue down, small investors are going to say, oh, look, it's going to go right back up. They're going to buy the dip. Now, even with the market being flattish to slightly lower today, and that's all it is, we do have one stock, Apple, taking a nice beating today. It's coming off of the lows, but still, 2.5% on Apple for the biggest market cap company in the world is a big move. The key here is going to your daily chart, folks, and you can see the bearish pattern here. All right, this is very, very important. You had this sharp decline, and then for the longest time now, you've gone slightly higher, and you can see here, it wasn't a sharp rip up. It was just an ever so slight climb. That is a bearish inside bar candle formation. That's a technical candle formation. Look at the sell-off today, right to the 20 moving average. That's where it's going to probably pause today. The question then in the coming days, will it be able to break the 20? If it breaks the 20, you're going back to these lows. Let me put that in differently here. Okay, now we can leave it, no big deal. But right to those lows here, and then the 200 moving average. I would say I would not touch Apple until it gets to the 200. Once it gets to the 200, I would reevaluate, maybe get involved. And again, I think one of the important things about Apple is to notice that the stock is not now the leader in the market. I mean, for a long time now, here was the high, but the markets hit a new all-time high yesterday, and look at where Apple was. It wasn't even close to that high. So it's important to recognize that this stock has now become kind of unaffiliated with the market hitting new all-time highs on a daily basis. And again, it does free the stock to continue down until it gets to probably the 200 moving average around 146. At which point it becomes in my opinion, a more intriguing opportunity. All right, again, really amazing recoveries on almost everything out there. One of the stocks that I was pointing out to members earlier today was NVIDIA. I think this is just tremendous. If you go to your intraday chart, very quickly this stock flushed early here, and then look at how quickly it went back to the flat line from yesterday. And now it's just down 50 cents on the day, which is nothing. That's like a walk in the park for that stock. It's a $200 stock. But, when you see recoveries like this in NVIDIA, which has been a leader, unlike Apple, NVIDIA has been a leader. Absolutely. Other leaders in the market, one down today, but Boeing down $1.66. But this has been a leader. So you'd watch these leaders for indicators. And right now, for the most part, Boeing down $1.70 is nothing to write home about. NVIDIA is barely negative on the day. Those are the types of stocks that, in my opinion, we want to be following to see whether or not they, react and start to get weaker. And so far, they haven't. All right. So again, just going back to the spiders, folks, the S&P 500. I wouldn't be surprised if we end flat today up here or even slightly positive. This is bullish again. Don't take it any other way until the market proves itself. Buy the dips. Join the party. That's what we're doing in the chat room every day. And literally, I think we've now taken, in the last 5 weeks, over 40 trades, and we have 2 losers. So I think it's like 39 or 40 winners out of 42. I mean, it's really amazing. Absolutely, just good trading, and because it's so easy. I mean, really, all you're doing is buying the dip. Buy the pivot low, buy the pivot lows. And you can do that on tons of different stocks. Apple today was a great opportunity for us. We made good money twice on that stock, as well as a few others. Okay? All right, on that note, come join us at InTheMoneyStocks.com. If you want the chat room, join the chat room. That's where we give live trading calls over a microphone. You could listen to us. I tell you exactly where I'm entering, I'm exiting. You make money right alongside of us. Again, today, 5 winners. Beautiful trading in the morning session. Most members made about $3,000 to $5,000 today. Really tremendous. And then also, if you want more swing trades where you buy and hold for a week or two or a month, that's where you're going to go to the Research Center. You get daily videos and all that other fun stuff. So come join us there at InTheMoneyStocks.com.